Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet subscribed to my channel, in this channel you will find the real information, real market updates that everyone cannot tells you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end, because YouTube will not push my videos to more people and add many things related to this topic and make this speech fully professional, emotional human touch, and powerful. Listen to me very closely, because the financial ground you are standing on has fundamentally shifted beneath your feet. Today is Tuesday, May 12th, 2026. Mark this exact date on your calendar, circle it in red ink, and commit it to your memory. What we have witnessed over the last 24 hours is not just another bad day on Wall Street, nor is it a routine fluctuation in the commodity markets. We are not looking at a mere market correction or a temporary dip in sentiment. We are staring directly into the abyss of a paradigm-shattering event. Today, the Federal Reserve crossed the Rubicon. They have officially triggered a sovereign debt crisis that will rewrite the rules of global wealth, and in direct, violent response, the price of gold has not just breached, but utterly obliterated the $3,000 support level. I need you to understand the absolute gravity of what that means, because the mainstream media is currently scrambling to sanitize the narrative. They will bring on their polished anchors and their heavily credentialed economists to look directly into the camera and tell you that the banking system is sound, that the dollar is strong, and that this is merely a technical anomaly. Do not let them lull you to sleep. Ask yourself this one simple question. If the system is so incredibly strong, why is the oldest, most reliable safe haven asset in human history screaming a warning cry that can be heard across every financial capital on Earth? The truth is terrifying, but it is a truth you must face if you want to protect your family, your life savings, and the future you have bled to build. We have spent the last several decades living under the greatest financial illusion ever orchestrated. For years, the establishment peddled a comfortable, intoxicating lie. They told us that deficits do not matter. They convinced the public that a nation could simply borrow infinite amounts of currency, print money to cover the shortfall, and never face a mathematical reckoning. We were told that as long as the United States possessed the world's reserve currency, we possessed a magic wand that exempted us from the laws of economic gravity. But gravity has a funny way of asserting itself, and mathematics remains eternally undefeated. To fully grasp the magnitude of today's catastrophe, we must look at the exact mechanics of the trap the Federal Reserve walked into this morning. For months, the bond market has been a powder keg searching for a spark. The United States government, addicted to spending, has been flooding the market with historic issuances of treasury bonds to fund multi-trillion-dollar deficits. But a profound shift has occurred in global psychology. The buyers have disappeared. Foreign central banks, once the reliable dumping ground for American debt, have quietly stepped away from the table. The domestic banking sector is already choking on underwater bonds left over from the inflation spikes of the early 2000s. This morning, during a critical treasury auction, the inevitable finally happened. The auction stalled. The buyers demanded a significantly higher interest rate to compensate for the massive risk of holding American debt. This placed the Federal Reserve in an impossible, fatal bind. They were forced to look at two horrifying options. Option one, allow the bond market to dictate the terms, let interest rates spike to their natural, unmanipulated level, and watch as the United States government immediately defaults on its debt obligations. A spike in yields would not only bankrupt the sovereign, but it would instantly crush the corporate debt market, wipe out the commercial real estate sector, and send the regional banking system into a death spiral. Option two, step in as the buyer of last resort, aggressively monetize the debt by printing hundreds of billions of new dollars out of thin air to buy the bonds nobody else wants, and permanently surrender the fight against inflation. Today, they chose option two. They always choose option two. When the Federal Reserve signaled their intent to cap yields and monetize this new wave of debt, they implicitly declare to the world that they are no longer an independent central bank fighting inflation. They have become a captive subsidiary of the Treasury Department, tasked solely with keeping a bankrupt government solvent through currency debasement. This is the exact textbook definition of fiscal dominance. It is the precise moment a slow-motion debt problem accelerates into an uncontrollable sovereign debt crisis. The facade of price stability was shattered on live television today, and intelligent capital immediately panicked. Which brings us to the yellow metal. As the realization of the Fed's capitulation swept through the trading desks of New York, London, and Tokyo, we witnessed a run on physical gold that defied all modern modeling. The surge past the $3,000 mark was not a gradual climb. It was an explosive, violent repricing of global risk. For years, the $3,000 level acted as a massive psychological and technical ceiling. Every time gold approached that number, algorithmic trading and paper market manipulation on the COMEX exchange would batter it back down. The establishment desperately needed gold to look weak, because a strong gold price is an indictment of the fiat currency system. It is the canary in the coal mine choking on the toxic fumes of money printing. But today, the paper shorts were completely overrun. The sheer volume of demand for physical delivery broke the mechanisms of suppression. Why is this specific number so vital? Because $3,000 is not just a price target, it represents a structural breach. When resistance of this magnitude becomes the new support floor, it signals that the market is entirely repricing the value of the underlying currency. Let me make this abundantly clear. Gold is not actually going up. The dollar is going down. The purchasing power of the fiat currency you hold in your bank account is collapsing in real time. Gold is merely a mirror reflecting the silent destruction of your wealth. You must look beyond the borders of the United States to understand who is driving this historic surge. This is not being driven by retail speculators day trading on an app. This surge is being driven by sovereign nations. For the past 4 years, we have seen an unprecedented, stealthy accumulation of physical gold by the central banks of the BRICS nations and the broader global south. China, Russia, India, and their economic allies have been quietly divesting from U.S. treasuries and aggressively converting those digital illusions into physical bullion. They have been draining the Western vaults and moving the metal eastward. They saw this Tuesday coming. They did the math on the American debt to GDP ratio, looked at the unfunded liabilities, and realized that a default was mathematically certain. They understood that the United States would ultimately choose to default softly through inflation, rather than defaulting hard by missing bond payments. By surging past $3,000, the gold market is officially telegraphing that the era of unquestioned faith in Western sovereign paper has drawn to a violent close. We are witnessing the birth pangs of a bifurcated global financial system. The world is splitting into two distinct hemispheres: a Western bloc drowning in unpayable debt and relying on the alchemy of central bank printing, and an Eastern bloc anchoring its newly formed trade settlement mechanisms in tangible commodities and hard, physical money. The weaponization of the US dollar back in the early 2000s was the fatal geopolitical miscalculation that accelerated this exact scenario. When Washington demonstrated that they could freeze the foreign exchange reserves of a sovereign nation with the push of a button, a chill went down the spine of every foreign leader on earth. The fundamental trust that underpinned the global dollar standard evaporated overnight. You cannot operate the world's reserve currency and simultaneously use it as a weapon of financial warfare. The BRICS nations learned that lesson, and today's gold price is the receipt for that education. They are building a parallel financial architecture, a system that settles trade outside of the SWIFT network, and they are backing it with the exact asset that broke through the ceiling today. But I need to pull this conversation away from the macroeconomic charts, away from the geopolitical chessboards, and bring it right into your living room. Because the most tragic element of today's events is not what happens to the bond yields or the institutional portfolios. The tragedy is what this means for you, for your children, and for the communities we live in. A sovereign debt crisis is a deeply human catastrophe. It is a silent, insidious thief that enters your home in the middle of the night and steals the hours of your labor. Inflation is not an act of God. It is not an accident of nature. It is a deliberate, calculated policy. It is the most regressive tax ever invented by the political class, designed to extract wealth from the poorest and most vulnerable citizens to pay for the excesses of the elite. When the Federal Reserve creates trillions of new dollars to suppress bond yields and fund government spending, they are directly diluting the value of the money you have saved. They are transferring the purchasing power from your bank account to the government and the banking sector. Think about the young families trying to build a life right now. They did everything society asked of them. They went to school, they got the jobs, they tried to save for a down payment on a modest home. But because the currency is being continually debased, the price of real estate, food, and energy continues to skyrocket out of their reach. They are running on a treadmill that keeps accelerating, and no matter how hard they sprint, they are falling further and further behind. They are being priced out of their own country, not because they are not working hard enough, but because the money they are paid in is fundamentally broken. Think about the senior citizens, the retirees who played by the rules for 40 years. They put their faith in the system. They parked their life savings in government bonds, trusting the narrative that these were the safest assets on earth. They expected a fixed income that would allow them to live their final years with dignity. Today, as the Federal Reserve pivots to monetization and surrenders to inflation, those fixed incomes are being utterly vaporized. The retiree goes to the grocery store, and the cost of basic sustenance has doubled. They go to the pharmacy, and the cost of keeping themselves alive has become a luxury they can no longer afford. This is the brutal, unforgiving human toll of the events that transpired today. We are watching the total evisceration of the middle class in real time. The political establishment will try to point fingers in every direction to distract you from this reality. They will blame corporate greed for rising prices. They will blame supply chain disruptions. They will blame foreign conflicts and geopolitical adversaries. They will invent 1,000 different scapegoats to avoid looking in the mirror. But the unvarnished mathematical truth is that the crisis we face today is the direct result of a debt-based fiat system reaching its terminal velocity. You cannot borrow your way out of debt, and you cannot print your way to prosperity. This realization is incredibly painful, and I feel the weight of it every single time I sit down in front of this camera. I read the comments you leave on this channel. I read the emails from single mothers working 3 jobs just to keep the lights on, and from fathers who are terrified that they will have nothing left to pass down to their children. I hear the quiet desperation of millions of hardworking people who inherently understand that the game is rigged against them, even if they don't know the exact terminology of monetary policy. The system was meticulously designed to enrich those standing closest to the money printer, the financial institutions, the defense contractors, the politically connected, while systematically bleeding the working class completely dry. But hear me clearly, panic is not a strategy. Despair is not a solution. I am not bringing you this warning to paralyze you with fear. I am delivering this message to wake you up, to rip the blinders off, and to arm you with the intellectual ammunition you desperately need to survive what is coming. History is a profound teacher, and if we look back at the collapse of the Weimar Republic, the hyperinflationary spirals of Latin America, or the slow-motion decline of every major empire that debased its currency, we see a recurring pattern. The playbook of the elite never changes. But more importantly, history also reveals that those who understand the mechanics of the transition, those who take decisive, calculated action before the masses panic, do not just survive these crises. They preserve their wealth, and in many cases they build generational legacies. So, what must you do in the wake of today's historic trigger event? How do you insulate yourself from a central bank that has gone rogue? The absolute first step is a radical psychological shift. You must permanently stop measuring your net worth in fiat currency. The dollar, the euro, the pound, these are no longer reliable stores of value. They are rapidly depreciating mediums of exchange. They are hot potatoes. Your goal is no longer to accumulate the maximum amount of paper currency. Your goal is to hold that currency for the shortest possible duration before converting it into something real. You must begin measuring your wealth in ounces of metal, in acres of arable land, in barrels of oil, and intangible, undeniable assets. Second, you must recognize the profound implications of gold crossing the $3,000 threshold. This is not the end of the rally. This is the launch pad. In an environment where the sovereign debt requires infinite money printing just to service the interest, gold effectively has no top, because fiat currency has no bottom. While I am not a financial advisor and this channel is meant for educational purposes, I can simply point to what the most intelligent, deeply capitalized entities on Earth are doing. The central banks are draining the physical gold market. The billionaires are aggressively buying up productive farmland and critical infrastructure. They are systematically moving their wealth out of the digital, paper-based financial matrix and grounding it in the physical world. They are securing resources that cannot be diluted by a committee vote in Washington. You must look at silver as well. Historically known as the poor man's gold, silver possesses dual utility as both a monetary metal and a critical industrial component necessary for the modern technological grid. As the fiat system fractures, assets that possess true, uncounterfeitable scarcity will become the lifeboats of the new economy. If you are sitting on a traditional portfolio heavily weighted in government bonds and overvalued equities, You are standing directly in the path of a monetary freight train. The old rules of investing are dead. The 60-40 portfolio is a relic of a bygone era of fake stability. Third, and perhaps most crucially, you must aggressively pursue personal sovereignty. In a hyperinflationary, debt crisis environment, carrying high-interest consumer debt is a financial death sentence. The banking system will attempt to squeeze every drop of margin out of the consumer as the crisis deepens. You must deleverage your life. You must focus on building deeply connected local communities, because when the macroeconomic structure fractures, the microeconomic structure of your neighborhood is all you will have left to rely on. Learn tangible, irreplaceable skills that carry value regardless of whether the stock market is open or closed. The era of outsourcing your survival to a benevolent government and a stable banking sector is officially over. You are your own central bank now, and you are the only one responsible for your family's balance sheet. Do not underestimate the speed at which this unraveling will occur. Financial history tells us that confidence in a currency takes decades to build, but it can be destroyed in a matter of weeks. The breach of the $3,000 gold level is the psychological dam breaking. As more institutions and everyday citizens awaken to the reality that the Federal Reserve has chosen inflation over default, the velocity of money will violently accelerate. People will rush to exchange their dying dollars for anything of tangible value, creating a self-fulfilling feedback loop that drives prices exponentially higher. This is the anatomy of a currency crisis, and today, the Federal Reserve fired the starting gun. Tomorrow, you will wake up and the machine will try to convince you that everything is fine. They will manipulate the daily statistics, they will change the way they calculate inflation, and they will use every psychological operation at their disposal to keep the masses docile and compliant. They need you to keep your wealth inside their burning building so they can use it as exit liquidity. You must be smarter than the algorithm. You must trust the historical precedent over the political rhetoric. Trust the undeniable mathematics of sovereign debt. Understand that every single fiat currency in the recorded history of human civilization has eventually returned to its intrinsic, fundamental value, which is exactly zero. We are standing at the threshold of the great financial transition. It is going to be incredibly turbulent. It will test your resolve, it will test your patience, and it will terrify those who remain willingly blind to the reality of the mathematics. But for those of you who have the courage to face the truth, for those of you who take the necessary steps to secure your wealth in hard, unprintable assets, this is your moment to break free from the matrix of debt slavery. I am speaking to you today not just as an analyst, but as a fellow human being navigating this storm alongside you. It is the greatest honor of my life to serve this community, to stand on this platform, and to deliver the unvarnished, raw truth that the financial elite desperately want to keep hidden from you. We are in this together, and together we will navigate the collapse of this corrupt system and protect the wealth we have worked so hard to build. If the truth in this message resonated with you, if it opened your eyes to the reality of the Federal Reserve's actions today, hit that like button right now. Share this video with every single person you care about. Send it to your family, text it to your friends, and force them to understand what the surging price of gold is actually telling us. The algorithm on this platform is designed to suppress this exact type of honest, unfiltered financial reality. So your active support, your comments, and your shares are the only way we can pierce through the censorship and wake the masses up. Protect your wealth, trust your instincts, and prepare your families for what is undeniably coming. I am John A.G., this is Aurex, and I will see you in the next update.